It is time now for a check of the top business news stories. I'm joined by Kate Moody. Hello, Kate.
Hi, Tom.
Let us start by talking about a big deal between two big names in the world of luxury, but it's a deal that appears to be on the rocks.
Yeah, the American jeweler Tiffany's says that it's going to be suing LVMH after it backed out of a $16.2 billion takeover. The Paris-based fashion giant said it had delayed the process at the request of the French government. The government has confirmed it sent a letter to LVMH. The luxury products produced by brands like Louis Vuitton and Moët Hennessy are among those that could be targeted by new U.S. tariffs in a transatlantic trade spat. Luke Schrago explains.
It would have been the biggest deal the luxury goods sector had ever seen. A $16 billion takeover of US jeweler Tiffany & Company by French Leviathan LVMH. Now the merger may be no more after the luxury giant said it was walking away. It followed a letter from the French Foreign Ministry asking it to delay its acquisition until after the new year. Paris is apparently looking to assess the fallout from potential new tariffs from Washington, themselves a response to a possible future tax on global tech giants. LVMH signed the deal with Tiffany in November last year. It would have given the French firm a wider presence in the US, its second largest market, and its experience and global reach would have benefited Tiffany, seeking to reach younger and more digitally inclined consumers beyond US borders. However, the coronavirus hit the luxury industry hard. LVMH agreed to pay $135 a share for Tiffany last year, but the jeweller's been trading at $10 less for weeks, and its second quarter global sales had dropped 29%, raising questions over whether the French conglomerate was overpaying. Tiffany, though, still sees luster in the deal. It's now suing LVMH to get the merger completed.
Let's check in on the day's trading action now. The major European indices rebounded after Tuesday's sell-off. London's FTSE 100 and the CAC 40 in Paris gaining about 1.4% each. Shares in Frankfurt and Milan were closer to 2%. Wall Street's also rallying from its big losses this week. The Dow Jones jumping around 650 points. The tech-heavy Nasdaq trading up nearly 3% this hour. Its major components, including Apple, Google, Facebook, Amazon, and Tesla, had lost a combined $1 trillion in market value over the last 3 sessions, all trending higher now. Shares of Tiffany, meanwhile, are down over 6%, while LVMH closed flat in Paris. Moving on to some of the day's other business headlines now. United Airlines says it's reached a preliminary deal with pilots' unions that would reduce the number of layoffs in the coming months. The carrier had planned to cut or furlough some 16,000 employees. This deal could now save some 3,000 of those jobs. Other U.S. carriers are also planning major cuts starting in October, when the terms of their federal aid packages are due to expire. Ryanair has further cut its annual passenger target from 60 to 50 million for this year, saying it expects the winter travel market to be a write-off. The low-cost carrier says it will further slash prices to entice flyers. Boss Michael O'Leary, meanwhile, has lashed out at the British government's handling of the coronavirus pandemic, notably criticizing its quarantine policies. He told the BBC UK airports should expand testing to allow the return of safe international travel. And the French supermarket chain Auchan is to cut nearly 1,500 jobs. The retailer had already announced job losses in January. This is the second phase of what it describes as its reinvention. It'll invest more in its online offerings rather than relying on stores. The Trump administration is preparing an order that would ban imports of products including cotton, textiles, and tomatoes from China's Xinjiang region. The formal announcement is pending, but it centers around allegations of forced labor and the mistreatment of Uyghur Muslims in that autonomous northwestern territory. Xinjiang is also the focus of a separate controversy, with human rights activists criticizing Disney for filming its latest hit, Mulan, there. Well, despite those rising and ongoing tensions between the U.S. and China, American companies that do business there are sticking to their guns for now. 92% of those surveyed by the American Chamber of Commerce in Shanghai said they remained committed to staying in the country. U.S. President Donald Trump has repeatedly raised the idea of decoupling or separating the two economies. A third of companies surveyed, though, said the deteriorating relationship had made it more difficult to recruit and keep staff. And the majority said they're worried that the trade war could drag on for years.
71% of our respondents say that of looking at the next 5 years, their top challenge to their business is going to be the U.S.-China relationship. And what we take away from that is this Beijing-Washington dialogue, they need to work this out because it's having an impact on business performance here.
Okay, well, thank you very much indeed for bringing us up to speed on all the goings-on in the world of business. Kate Moody, our business editor. Thank you.